Thank you, everyone, for being here. My name is Yinka Adegoke. I'm the Africa editor for Semafor. I'm incredibly excited for all of you to be here to hear our discussions about the next 3 billion. It's an incredibly important conversation for us to have. We're really trying to make sure that we expand the kinds of conversations that we have about development on the continent. And I really could not have a better qualified person, a more passionate person to have that conversation with. Dr. Adesina is president of the Africa Development Bank, and we're going to have some conversation towards the end about your legacy. But you've been doing very important work, and if you could just give a very quick overview on the topic at hand today, which is just the role of digital infrastructure, digital development in the broader conversation about development on the continent.
Well, thank you very much, Yinka. I think when people think about digital world where we live in today, we need to recognize that Africa actually had been moving very far with regard to that. If you take a look, for example, in terms of mobile money accounts, yes. Globally, you have today 50% of all the global money accounts are actually in Africa. And if you look at what the fintech companies are doing, every single day, they move about $2.3 billion. So Africa is really at the forefront of that compared to what the global average really is. Now, but to your point about the infrastructure, the key is infrastructure is like the backbone in your body. Right. Whether it's energy, whether it's child infrastructure, water, sanitation. If you have a backbone, okay, you sit up straight. If you don't, you can't sit up straight. No economy can grow without investing in infrastructure. And we as African Development Bank, we've invested more than $55 billion in the last 7 years alone on infrastructure, from energy to water to sanitation, for road transport and all of that. But to the issue of the infrastructure for digital technology. And so one of the things that we've done was to first actually develop the connectivity infrastructure itself. So over time, we've invested in the submarine fiber optic cables. The main one, which is in West Africa, we invested in the easy one, which was in the East Africa part. We
should let people know that's easy, EASSY.
Yeah, easy, yeah.
It's an acronym.
It's an acronym.
It wasn't an easy project.
It wasn't an easy project. Absolutely not an easy project. It's a very expensive project, too. But we also have the land, terrestrial lines, fiber optics that we also have, which is the Trans-Sahara cable that goes all the way to Niger, Chad, and linking all the way to the Mediterranean and all of that. Yeah, landlocked countries. And if you take a look at an area where connectivity is quite low, which is the Central Africa region, we've invested also in the fiber optics to connect that. All of what that is doing is bringing down the cost of internet.
Can we talk a little bit about the innovation you've had to, take on to make sure these investments can happen?
Well, first and foremost is that you just have to realize that it's the backbone. So we started by basically saying, let's build first the backbone. But every infrastructure is as good as the utility that you get from it. And so, for example, if you look at governance more in general, we started off by saying, with this infrastructure, people will be able to know, for example, how governments are run. Government should never be a black box, right? How the utilities functioning, what am I getting? Am I going to get things in terms of identification card? How am I going to get financing, tax payments, and all of that? So there is no substitute to transparent governance. And so this kind of digital infrastructure allows us to be able to do that. And we have something, for example, in Lesotho, we have also in Tunisia, which is e-governance systems and things like that are good. But I do want to also say that the issue of digital financial inclusion, which is part of what you guys are really talking about, is so important. You have a lot of millions of people, today that can access basic internet. They can have access even to mobile phones and things like that. And yet you live in a world wherein you have, people, financial institutions want to lend, but there's no way of identifying people. So if you can't identify your customers, how are you going to lend to them? Things like that. So we at the African Development Bank, together with the Gates Foundation and also with the government of Luxembourg, we have something called digital financial inclusion for Africa that's trying to bring 338 million people, right, into that.
Yes.
But linking that to the infrastructure also requires that in doing that, you have interoperability of systems. So for example, in the West Africa Economic and Monetary Union, we're working with them to make sure that all the systems can talk to each other, speak with each other, which is important. But we got to also go beyond all of these things and look at the future, which is the youth. You know, if you take a look at the issue of skills that you need, it's not just a physical infrastructure, but the young people must have the skills to be able to do, use and take advantage of artificial intelligence, robotics, big data, all these things that we have to do. So what are we doing to prepare the youth for that digital future, right? It's so important. And so we decided, for example, we are something called Coding for Employment. We're working with Microsoft, making sure that we have about 130 centers of excellence where people, more than almost 250,000 young people are trained, digital literacy and all of that. I'll give you a good example, was in Rwanda, for example, where we have a Rwanda Innovation Fund that is supporting digital entrepreneurs to do stuff. We have something in Nigeria that's called iDice, a $614 million program, looking at digital and creative enterprises that we are supporting for them. And so I think this is what we are trying to do for young people to be able to connect into all that. But I am so proud of the fintech industry in Africa today. You know, I mean, you look at, you know, maybe about 5 of them now are basically unicorns and so on. So I think that's a lot to celebrate about Africa, but there are many areas that still don't have connectivity.
One of the issues is obviously funding for those private companies, and actually just the way African economies in general are sort of measured, if you like, in the sort of global finance system. And we know about the African Union's big ambition to have a homegrown credit rating agency. And I was kind of interested to hear your take on what role that might play, what impact it might have on the future of African finance and the way African economies are measured.
Well, you know, first and foremost, I think African economies, okay, we've been talking about the reforms of the global financial architecture. Yeah, I don't think that global financial architecture is serving Africa's interests, you know. So take the whole issue of access to capital. It costs you 3 to 4 times to access capital in Africa than it is to have access to capital in any part of the world. And this is based on risk, but mainly in terms of perceived risk. Well, I'm sorry. Your perception is not my reality. You know, I'm not going to, you have to properly assess the risk and the returns to investment in Africa. So take, for example, 2 countries.
But just because of time, I want to make sure, because time is...
Oh, sorry.
I want to make sure that we just touch on that point about what
the credit rating,
what that agency can do or not.
That credit agency is not a political institution. It will actually provide a counterfactual to existing credit agencies so that Africa's risk is properly addressed, whether it's market risk, financial risk, political risk is properly addressed. And us at the African Development Bank, when people don't want to invest in Africa, they say it's because of risk. I'm sorry. You know, you take a look at the whole situation, Moody Analytics. We asked them to look at the returns, losses on infrastructure assets across Africa for 14 years. What did they find? Losses in Africa, 1.9%. In North America, it's 6.6%. Latin America, 12%. Western Asia, 4.5%. Africa is the least risky. At the same time, it's the one where the cost of capital is quite high. So it's not a fair rating system that is being used for Africa. And I think that you have to level that playing field. And that's what this is going to really do.
You think the agency will be able to?
I think so.
Let me ask you about, just take it to the macro. We had the US Federal Reserve cut interest rates last week by 50 basis points. What impact might that have?
Oh, that is going to be big because, you know, if you look at what has happened, it's a whole series of problems. You have war in Ukraine, you have COVID, you have depreciation of currencies, you have global inflation and all of that, which has actually made the cost of servicing debt extremely high. Look, in 2010, Africa was paying about $17 billion, Yinka, in servicing its debt. Last year, it's paying $74 billion to service that same debt. And so when you actually have this, the lower interest rate will also make sure that the cost of servicing that debt actually goes down. But even talking about debt in a minute, I don't think that everything should be based on simply taking foreign debt. That's a lot. Last panelists, I was just listening to them as I was coming in. The importance of mobilizing domestic capital markets. Look, nobody can develop for you. You have to mobilize your domestic savings to develop yourself. When people talk about Africa, we've got $3.5 trillion of institutional capital, whether it's for sovereign wealth funds or whether it's pension funds or insurance pool of funds. Well, if it's a pension fund, you're supposed to actually retire, hopefully, and get annuity payments for the rest of your life. But if there's no good hospitals, no roads, no power, that's a miserable retirement. So we've got to make sure then that we are aligning the asset allocation by our institutional investors into dealing with the critical infrastructure needs that Africa has. So I think that this is very, very important, that you got to develop with pride, and the way to do that is to mobilize your own capital.
Fantastic. Your passion is something that you can tell from the audience, and you know, wherever I see you speak, everyone loves it. You're coming to the end of your term next year in May, your second term, and it'll be 10 years in May when you leave the bank. What are you hoping for? How do you hope your legacy will be built on with whoever takes over next? What kind of characteristics and philosophies?
You can drag me to all that. No, I just want to say that I couldn't, when I took on this assignment, I said this is not a job, this is a mission. There's nothing more important than being asked, giving capital, giving the confidence and the responsibility and accountability to go developing the continent of my birth. And that's how I look at it every single day. And I thank God I have great staff. I have extremely supportive shareholders. And since we started in 2015, three things I would say. First is that the capital of the bank when we started was $93 billion. Today, the capital of the bank is $318 billion. Secondly, is that 2 years ago, the African Development Bank was ranked as the best multilateral financial institution in the world, right? And we also last year were ranked, and this year as well, as the most transparent financial institution in the world. And so you're looking at changing narratives to doing the right things. This African Development Bank have great staff. We issued the hybrid capital with the first multilateral financial institution in the world to issue hybrid capital as a part of our capital stack that allows us to leverage more than 4 times. We also are the ones working together, myself and Ilan, president of the Inter-American Development Bank, on the SDR, the special drawing rights. We cracked that, and now the IMF board has approved that we can use up to $15 billion of the SDRs as hybrid capital. What that means is that becomes $60 billion, just like that. So that's what the power of innovation is. So, I'm proud of the government's support because, I don't work alone. I have great staff. I think I have some of the best staff one can ever hope for. I also think that when people ask me, how do you want to be remembered, it's an honor to be asked to serve my own continent. I'm proud of what we've actually done. I think our work over the last 7-8 years has impacted more than 400 million people, and that's what it really matters: water, sanitation, energy. Myself and President Ajay Banga, President of the World Bank, when Ajay was nominated to become President of the World Bank, the first place in the world he came to was me. He came to Abidjan. And I sat down with Ajay Banga. I said, Ajay, 3 things I'm going to ask you. First, Africa must have universal access to electricity, period. 2, we must feed ourselves. 3rd, we must have jobs for our young people. And I'm delighted to let you know that today, at the spring meeting, Ajay Banga and I announced what's called Mission 300, which is we are going to connect 300 million Africans to electricity by 2030. It's a totally different way of working. We are not going to industrialize in the dark. We are not going to be competitive in the dark. And look, we just tired of being in the dark, and we're going to take things up on ourselves and do what we need to do to make Africa develop with pride.
Thank you, Dr. Adesina. I hope that we will get you one more time before you leave.
I hope so.
Enjoy your passion. Thank you so much.
Thank you very much.